What's up, guys? Welcome back to Airbnb ABCs. I'm very happy to have you guys here today because a friend of mine and I were debating short-term rentals and real estate and rental property versus the traditional tax-advantaged market accounts, such as your 401ks, Roth IRAs, 529 plans, things of that nature. And it's my opinion that short-term rental properties are better than those tax-advantaged accounts. And that will probably come as no surprise to you if you've clicked on a channel called Airbnb ABCs, that I am obviously biased towards the short-term rentals. But the thing is that I do have market accounts and I do invest in the stock market, so I can see both sides of things. But in my opinion, these short-term rentals provide a lot of advantages over the market accounts beyond just what the government and these various financial institutions that have a financial stake in getting you to buy these do. Which, for full disclosure, I don't have a financial stake in you buying short-term rentals. I'm not a real estate agent. I am not a broker or anything. I'm just a guy on the internet who invests in short-term rentals, likes them, and wants to tell you about what I'm doing so that maybe you can repeat it and have some sort of success yourself. But first, I want to start off with sort of the bad side of short-term rentals versus those market accounts. And the thing is that short-term rentals or any rental property is going to be work. There is going to be effort involved. And it can be, on a huge scale, from just occasionally you have to deal with your property manager or a cleaner to, if you're like me and you self-manage these things, you're going down to these places, you're going in, you're setting them up, cleaning them up for the initial setup. You're working with cleaners, you're communicating with guests all the time. There are some very specific tax benefits to this that we'll get to towards the end of the video. You're doing your own accounting, taxes, and all that. This is the amount of work that you're going to have to do versus a market account, where a lot of cases it is just click a button, you are invested, or in a lot of cases these things are automated. For like your 401ks, you put in the 3% that gets you the 3% match, which is also a great benefit of these. They are automatically invested if you set that up. And you really don't have to do anything. It's mindless. And if you want to get out of them in any given time, you just click a button, versus real estate where you have to put it up for sale, go through inspections, go through repairs, things of that nature. The market accounts are much easier in that case. But now for the many, many, many good things about investing in short-term rentals specifically. And the biggest benefit, without a doubt, is that you get your money now. You get your returns now. And a lot of folks are looking at like, well, if I have this market account for 40 or 60 years and I'll have $1 million or $2 million when I'm 80 or 90 years old. And that's super because you won't be able to work any longer probably, and you'll need that money. But right now you can be getting the returns from your rental properties, and you can do with it whatever the heck you want. And this I cannot stress how nice this is. If you happen to need a new car, you can buy that. If you want to buy more rental property, you can buy that. You can take your cash flow and invest that into a market account like I do, and then let that grow in that market account, and then use those returns to buy more real estate. You can do whatever you want. Put in a pool, take a vacation. You get your money right now. Most market accounts are going to make you wait until you are at least 59 and a half to start withdrawing those without a penalty, such as like the 401ks. You can, if you withdraw early, you're going to pay your ordinary rate of income tax plus a 10% penalty. If you have a Roth IRA, you can withdraw any of your contributions. But if you want to get at those returns as well, so, say, for example, you do want to buy a rental property, you can only take out what you put in and not also those returns if you want to do that. Now, 529 plans are different. You can use that for different types of education expenses. But again, you're already going to be getting this money. You're not going to have to tie up lump sums of your money for long periods of time in order to get these returns. It's going to be coming in all the time for you. And when you look at these market accounts, a lot of times people look at that $1 million mark as sort of a benchmark for what they're going for. And if you start doing the 4% withdrawal on a 7 to 10% return, on $1 million is only $40,000 before taxes. Once you break that down, and let's say that you end up in a 10% tax bracket, if you are using a 401k that's taxed when you withdraw, you're looking at about $3,000 a month. And that is going to be, essentially in 30 or 40 years from whenever you start. 2 or 3 quality short-term rentals, not really expensive ones. These probably, $500,000 to $750,000 rentals. These ones will be able to get you that money right now. That $3,000 a month that you will be getting out of your 401k in 30 or 40 years, you can get that money right now. And if you look at this from a 30 or 40 year mark down the road, when that $1 million is only going to be returning $3,000 after taxes, These short-term rentals that you're buying now could potentially be doing 2 or 3 times that with the way that inflation goes, and just that things get more expensive, including the rent that you're paying for, or that you're charging guests for them to stay there, is going to go up as well. So the amount that you're looking for now at $2,000 or $3,000 may end up be returning $6,000 or $7,500, whereas that $1 million is still only going to return $40,000 before taxes. A lot of folks will say, well, you don't have this nest egg that you're building because you're not contributing that money into these accounts, and you are still building that nest egg and these equity amounts. You just aren't paying for it. With a market account, you are going to pay into that thing your entire life if you want to use that as your primary source of retirement income. So that means that every month you are going to have to take out a percentage of your paycheck, and some of that can be used to offset your taxes in a pre-tax account like a 401k. But you are going to be taking a portion of your paycheck forever, withholding it from yourself, withholding it from your family, and the things that you may want to do while you're young, while your children are young. You may need to pay for weddings or whatever that you may need to do, but you can't get at that money without being penalized for it, and you continue to have to put money into it. With a short-term rental, you get to buy once, and you should only have to cry once. Because all that you have to do is come up with that down payment money, which can be as low as 10% if you're buying a second home, or if you do something just completely wild, you could move into a short-term rental, a place that you would want to short-term rental. You could buy that as a primary home, and then after a couple of years, it is completely legal for then you to turn that into a short-term rental and move somewhere else and only pay like 3.5% down for an FHA mortgage. That is something you could do. It is legal. It is not mortgage fraud. Once you've purchased the place, and you can do something else with that. They don't lock you in and have people checking to see if you are still living there. But from that point forward, every time that you make that mortgage payment that you are paying with money that guests have paid you to rent the place, you are putting a portion of that towards the principal of that mortgage. So you are going to pay that down. That $500, $600, $1,000 a month is going to go into your equity base, your principal amount, this nest egg that you have. And just like that 401k, it's going to your equity is going to go up over time, but you don't have to withhold money from yourself and your family to do that. In addition, you're also going to be able to that place is going to appreciate in value. Now, your market accounts are going to appreciate in value as well, but that will just grow your nest egg even faster. Now, you may even be able to cash out some of that equity to buy more, so that you can take that amount of money that people have paid into that, be able to get a loan on that, and then go buy even more. And you can just sort of, keep increasing this depending on what your risk tolerance is and market factors at the time. Not every strategy works 100% of the time. But then people will say, Mike, what about the tax advantages of these market accounts? You'll have to pay no tax on a 401k up front, and then you can just do it at the rate that you're paying in retirement. And I don't know about you, but I don't plan on making less money in retirement because I'm going to have more free time and I'm going to be wanting to spend more money. So I would assume that with tax rates typically going up and not planning on making less than when I was working, the taxes that you pay may be more than if you would have just gotten it. And then when it comes to your Roth IRAs, you have already paid the tax on that, but you still have had to contribute to that your entire life and have that money essentially locked up by the government without them, holding that key over you of that early withdrawal penalty if you want to take out your returns as well. But what a lot of people don't know about real estate, and especially short-term rentals, is that it is the most tax-advantaged investment business that I know of, as far as being legal and having really crazy tax benefits. For one, if you do nothing else but buy the place and rent it out, your depreciation, which is that the IRS says that building has a life and it starts over every time it's sold. So if something was built in 1970, it may have a 30-year depreciation, and so that would end up being done in 2000. But if someone purchased that property, you sold it, someone purchased in 2000, that resets. So you get to do the depreciation all over again, and that is going to cover most, if not all, of your rental income. So you are going to get all of that rental income tax-free. It's the biggest tax savings, I think, ever. You will essentially pay no tax on that income. If you qualify, various tax loopholes, such as a short-term rental loophole that allows you to cover some of your W-2 and 1099 income, you can offset that with paper losses like accelerated depreciation if you qualify. If you're a material participant and you can prove that you put in enough hours to be a material participant, you don't even need to be a real estate professional in this because of these loopholes that are specific to short-term rentals. It doesn't count for long-term rentals. It could allow you to shelter some of your W-2 income, which is what I do every single year. And that is an even larger tax benefit than really any other of these market accounts are going to get. And there are multiple exit paths, including you can just pay capital gains. You can sell it. You say, I'm done. I'm going to sell it. You pay your 15% capital gains if you are in that tax bracket, which most people are, versus, on your 401k, paying your ordinary rate of income and hopefully making more in retirement than you were when you were working, and tax rates being higher. 15% doesn't sound too terribly bad. You can also use a 1031 tax exchange where you sell that, you don't pay any tax on it, roll that forward into the next building that you want to buy. Maybe you want to be done managing guests, managing contractors and cleaners. Take that money, go buy yourself an apartment building, put it under management. You just get a check in the mail every month. You still get all of those depreciation benefits, but it is something you can do. And there is this thing of defer until death, where you just continue to use 1031s to take that money that you've made on this property. Once it's done being depreciated, put it into a new one, continue to do that, and then that goes until you die, at which point it will go on to your heirs at a stepped up basis, and you will not have paid any tax on that gain that you've had from when you bought it until when you've died, rolling it forward that many times. And so those are the biggest reasons why I like short-term rental investments and real estate overall versus the traditional 401k, Roth IRA, 529 plan, anything like that. But there are also some intangibles that you get with these short-term rentals in vacation areas. This is one of the biggest things is, in a vacation area like Gatlinburg or Florida or, somewhere else like that. You cannot vacation in a 401k. It's not possible to do. However, you can take a vacation in a short-term rental. You can block off a week. And if you're down there for doing work, you can also write off any work expenses that you have when you're doing that, which you're going to do if you own one of these things. You're going to be switching out TVs or changing bed linens or switching out furniture. But then the rest of the time you can use for your vacation, for your family, which is something that you absolutely cannot do in a market account. And for all of these reasons, I really like Airbnbs, short-term rentals, VRBOs, whatever you want to call them, better than the 401k, the Roth IRA, or the 529 plan, other than getting your match. Definitely get your match or else you're leaving money on the table. Otherwise, take a look at this if you think that you are cut out to do the work necessary to make these things work. So guys, tell me what you think down in the comments. Am I right? Am I wrong? Are you a short-term rental investor? Are you a diehard market investor? And tell me how you're doing with it. If you like this, hit that thumbs up button for me. If you haven't yet, subscribe down below so you don't miss anything I put out on short-term rental investing. I appreciate you guys stopping by and hanging out until like 13:30 in this video, and I'll see you in the next one.